are we headed for a banking collapse? I'm Nate, the FitFutureMD, lost 30 pounds in 30 days. Pick up the free copy of the health and nutrition guide in the description below. Owner of Ensorsale.com. Ensorsale is family. Together we can rise up from humble beginnings and inspire others with the messages on our t-shirts. Get you an inspirational t-shirt today. So we've been in a bull market for, since 2012, basically, right? And I feel like a lot of people don't remember what recessions are like, or maybe even how capitalism actually works. So basically, like, when something's working, right, or something's successful, it's like everybody runs for the same door, right? Everybody wants the quick cash fast, etc., right? But a lot of times, that is, so like Walgreens a few years ago bought out Eckerd, right? Which is a, pharmacist company, right? They have pharmacies. But then that made where there was basically two Walgreens on the same corner, right? Because Eckerd had a Walgreens there. Eckerd had a pharmacy there, and Walgreens had a pharmacy there. So that's kind of how capitalism works. Like, a company gets a competitive advantage, and the other companies basically soak up that company that didn't have the competitive advantage anymore, right? But the biggest thing with these two banks that have collapsed, Signature Bank and Silicon Valley Bank, is that, especially Silicon Valley Bank. Silicon Valley Bank was in the S&P 500, on Thursday, right? So it's supposed to be one of the biggest 500 companies in the United States. And then all of a sudden it's basically gone, like shut down. And to a lot of people, that's pretty scary, right? Because if you're one of the top 500 companies in the US, then that means your reach or the impact on the economy is very big, right? So you got companies like Roku and Shopify, other big S&P 500 companies that are basically going to be impacted by this bank. And to most people, that's pretty scary, right? And say 97% of Silicon Valley's banks customers had more than $250,000 in their account. FDIC insurance only insures you up to $250,000. So it's basically like what happens to all that money. So there's a fear out there that there's going to be a big run on the banks. There's not enough. We all know that they lifted the restrictions on banking during COVID so that they could lend more money and keep the economy afloat, right? So instead of you being able to lend out 10 to 1 for every dollar, you could basically lend out unlimited amounts, right? which is to me very dumb because you were basically lending it out for free, right? So you're lending out money at 3% interest. You know, to me that's pretty stupid. But you know, all the banks did it, right? A lot of the banks did it, and you know, a lot of these banks are going to be overextended, and you know, when interest rates change, you know, and the recession happens, like these companies that they've invested in are allowed to borrow money, or you know, whatever the real estate that they're invested in, you know, is not producing money anymore. Like you start seeing, you know, banks collapse, right? So, or have a liquidity problem. There's not enough cash to cover, you know, how much is going out, right? So the biggest thing is if you're a normal person, like you don't even really care. Like most normal Americans don't even have $1,000 in a savings account, right? They're living paycheck to paycheck. You know, so like, imagine if you're a Roku employee right now, like Roku basically just lost 26% of its cash, right? So is Roku even going to be able to pay its employees? You know, Etsy, same thing. So everybody that's the work at home person that's, you know, hustling on Etsy, you know, are they even going to be getting payments from their Etsy accounts, right? And you know, the Federal Reserve has come out and said that they're going to have a emergency $25 billion for up to a year, you know, to keep the banking system from collapsing in times like this, right? But you still, you know, if you borrow money from the FDIC, like from the Fed, you eventually have to pay that money back, right? So you can see where, you know, these emergency measures have basically made it where the banking system is fragile, right? Like even the Federal Reserve only has like 1% or 1.26% of deposits in cash, right? So like they don't even have enough money to cover, you know, banking deposits. That's like 22 trillion or some crazy number that banks are supposed to be able to, you know, have in deposits. But like I say, my thoughts on this is this, you know, people that haven't lived through a recession before, you know, probably would be more freaked out. People that have, you know, and thought like, oh, I'll have a bunch of cash, you know, waiting in reserve, like these banks are not liquid enough to even give you your cash, right? So, and say even if you were the responsible one, you kept it like spread out all over these banks, like you may see what you worked for 20 years, you know, go down the drain because these banks lose your money, right? And you know, that's scary for a lot of people. Like, so imagine you work, and that's happened to people before, right? That's why, you know, the Great Depression happened, right? These banks didn't have money to cover their deposits. They went under, and the people all, you know, today you are rich and bank fails and tomorrow you're not, right? So, and people depend on you or, you know, your company to eat, to live. You know, it's scary, right? So that's part of capitalism, right? Like the economy goes up and there are winners and losers, right? But the economy has to shed the losers. So, you know, some other bank or some other entity will buy up the assets to, both of these banks, and they'll buy them for pennies on the dollar and make a crap ton of money, and most likely, these companies will get their money back because of the impact it would have on the economy if they don't, right? Like I say, the federal government has shown that it will bail out people, whether they do it this time completely or not. It does sound like they're going to get a bridge loan of some sort out there to keep everything going, right? So banks aren't collapsing, back to back to back every week type deal. Keep it from crashing out. The banks are still going to fail. The ones that have overextended and, very loose with lending and, whatever. But so as a normal person, what does this really mean for you? Right? Like, it literally, if you have less than $250,000 in your bank account, you literally have nothing to worry about. Right? You are insured. You might lose access 2 or 3 days, but you should have a 6-month to 12-month emergency fund anyway, right? Should always be prepared for a huge crash in the first place, right? So you should have a couple $1,000s in silver and gold, or some sort of hard liquid asset, right, that could be bartered with. I know some people like to use like whiskey and stuff like that for things, So that's a great idea, and a lot of people don't even think about that. They just think, oh, the system is the system, and we're just going to use the system, and it's going to be fine. Like, they don't even worry about it, right? But me being from the South, being hit by hurricanes, power doesn't work, electricity doesn't work. You still got to buy gas for your generators. You still need water. You still need food. So we already have all that kind of stuff figured out, for at least a while, because a hurricane hits, you could be without all of that stuff for a month, so we already kind of do all that stuff. But it's everybody else that's not prepared for stuff like that that'll have the issue. It's like in COVID, when there was a toilet paper situation, like, we already had toilet paper, one of the ones, like, so the biggest thing is just prepare yourself. Like, banks are going to collapse, companies are going to collapse, they'll be bought up, and basically it's almost like pruning a tree. You cut the tree, and the next year the flowers bloom back better. So that's what I think about the banks that are going under. Like I say, it does suck that they were supposed to be on the S&P 500, so it does suck that those people that were blindly invested in S&P 500 index fund just lost a crap ton of money. Like, people that had them in mutual funds, like, your stock goes from $160 to zero in a day. Like, I think I also talk about stuff like that too, is that just because something is, highly valued or highly ranked doesn't mean it can't go to zero in a day. Like, you actually are taking more risk. You're actually taking just as much risk as a penny stock, right? Like, so I talk about that a little bit sometimes too, but so just because something's in the S&P 500 doesn't mean it can't go to zero, can't go bankrupt, and these two companies have definitely just proved that. So I'm Nate, I'm the FitFutureMD. If you have any questions, hit them in the comments below. Pick up that free copy of the nutrition plan, a fitness and nutrition plan. Send me an email and tell me what you think about it. How about that? and we'll see you in the next one. Peace.